I guess some of your takes will have changed since before the show, given that extraordinary rally into the close. How significant is it that this week we never retested those Monday intraday lows and ended on such a positive note?
Well, it definitely makes a difference as it pertains to the short-term indicators. So we had a short-term oversold reading at the start of the week that was pretty extreme, looking from a bottom-up perspective at the components of the S&P 500. And what was really important that happened is that we saw a reaction to that. So when you have an oversold reading and you get a non-reaction, that's really bad news because it means that momentum is weak enough to keep the market going lower despite that oversold reading, that the buyers aren't stepping in. And just barely, they did end up stepping in this week. So the S&P 500 is in the green, as you mentioned, on the week, but only really by about 30 or 40 points. So it's not a big rally or an impressive reaction. But as you saw, there's been a lot of intraday swings and volatility. It's a little bit unsettling, but the end result is positive as it pertains to those short-term gauges. It does suggest that we'll get a little upside follow through next week, but it doesn't make any comment in my work on the intermediate term setup and the possibility that this corrective phase is over.
And what is your view on that? What are the key levels to look out for as to whether we are really got the bottom in or whether we're going to retest those lows?
You know, it's not even just about key levels, although we are watching 4,200 on the S&P 500 as the first major support. Unfortunately, below that, you get to about 3,825 as secondary support. So if we do see a breach of 4,200, it's not to say we get to that secondary support level, but that, of course, would increase downside risk. We look for a setup in the indicators, and it's not a setup that we can see in our short-term gauges, but rather intermediate and long-term gauges. And we want to see an intermediate term oversold reading, which is in reach, but it's not quite there yet. And then a reaction to that, so that improved momentum, meaning that the buyers are finally stepping in earnest. And that likely will take several weeks and put us out into March, which is a month that does tend to seasonally capture corrective lows.
Katie, I wanted to ask you about Apple because with the jump into the close, it closed up almost 7% today. It's still off of the highs, but back around $2.7 trillion in market cap. What do you see for that stock, the reaction to earnings, and what it might mean for tech more broadly?
If we just looked at Apple and not the rest of the market, I think we'd actually feel pretty good about things because Apple, of course, is a heavyweight in the major indices. And on its chart, it looks fine. I mean, it's higher highs, higher lows. Even the pullback that preceded the earnings announcement was pretty healthy in that it took it right into a former breakout point of about 157. And now it's right back above its 50-day moving average. So in and of itself, Apple looks pretty healthy. There's been a loss of intermediate term momentum, but it's nothing like we've seen in the major indices. However, when you go beyond Apple and you look at the FANG complex more broadly, you see a lot of deterioration. Unfortunately, that might be difficult for those major indices to weather. We have breakdowns in Facebook and Amazon, even Microsoft and Google, which really tend to trade in sync, look a little bit distributive in terms of topping formation. So I think the market is challenged by the setup in these other mega caps.
What's your take on Tesla, Katie? Because that's one that didn't enjoy as much of a bounce over the course of the week. Indeed, had a big slide yesterday.
We've been watching Tesla related to very important support around 900. And of course, it closed well below that level today for a second day. Because it's such a major level, we like to see it down below there for more than even a week. So for 2 Friday closes below 900, to us, that would be a pretty major breakdown for Tesla. And there's some interim support that was even tested today in the low 800s. But the targeted level from that breakdown would be even in the mid 600s by our measures. So we really want a good, strong rebound out of Tesla next week with this oversold condition that the market has on a short-term basis. And if we don't get it, Tesla will look very broken in our work.